Hello, everyone. Thank you so much for joining me today. Rivian just posted its second quarter 2020. Hello, everyone. Thank you so much for joining me today. Rivian just posted its second quarter 2023 earnings, and some pretty good trends are starting to emerge for the car maker. So without further ado, let's go ahead and get started. Now, in case you're not familiar with Rivian, Rivian are the makers of the R1T pickup truck. This is what it looks like. You may have seen it where you live. They also make this SUV called the R1S, which just started production not too long ago. And they also make these really cool looking, actually, if you see them in person, they're pretty dope, Amazon delivery vans. Now, some of the top line numbers from Rivian's earnings report: 50% increase in production versus quarter one of 2023. They've added a dual motor setup to the R1 lineup. The R1 lineup are the SUVs and the pickup trucks that they sell, and this takes down the setup from a quad motor to a dual motor, which makes the cars a little bit cheaper to afford. They've also highlighted $35,000 gross profit per vehicle delivered improvement, which means that they've increased their profitability or their losses. They've improved their losses by about $35,000 per vehicle built versus the first quarter of 23. And they've also increased their guidance for production from about 50,000 to 52,000 for the full year of 2023. If we dig into the numbers a little bit deeper, this is what their quarterly production looks like from the fourth quarter of 21 all the way through the second quarter of 2023. You can see a very steady increase outside of the first quarter of 23. They're growing at about 34% on average per quarter, and they increased again 50% from the first quarter of 2023. So pretty good production numbers. That's what you want to see as a brand new automaker that's starting to ramp up and trying to lose less money. You need to grow as fast as you can, and Rivian is really showing this in the second quarter. Huge jump versus the first quarter of 23. And then if we look at their deliveries, same exact trend, very similar to the production chart. Fourth quarter of 21, 909 deliveries, and then in the second quarter of 23, 12,640 deliveries. If we do the same math, that's about a 30% average growth rate quarter over quarter, and a 60% increase from the first quarter of 23. Again, great trends. They're producing more cars and they're selling more cars. And it's basically, if you look at the graph, it's just a line. It's almost like a line up. Very similar to if you compare it to Tesla back in the day, 2012, 2013, 2014, very similar growth rates in Rivian that they're having right now. So this is a really great thing from the company. One of the main reasons why they're doing so well as of late is because of the R1S product that Rivian has released. This product is about 70% of Rivian's current production. So they've shifted from only selling pickup trucks to selling pickup trucks and that SUV and the van, but they're selling a lot of those SUVs. And the reason why is because they're in a very unique sort of market where that's really the only true three-row EV that you can buy that's a full-size SUV that can go 300 miles plus on a charge. So I think that's one of the main reasons why Rivian is seeing some success as of late, and describes their recent trends, I believe, from a delivery perspective and a production perspective. If you're enjoying this content so far, I would love it if you throw me a like. Now, because Rivian is improving their deliveries and production, their profitability is also improving. They're still losing money per car sold, but that's actually improving. If you look at their gross profit percentage, which is basically the percentage that Rivian gets to take home after they sell a car at the car level before they take into account other expenses for the business, the percentage that they lose is getting less. So right now in the second quarter, they're about negative 30%, 37% margin, but it's drastically better than the sort of near 80% negative that they had in the first quarter and 150% negative that they had in the fourth quarter, and even lower in the third and second quarter of the previous year. So there is very consistent improvement quarter over quarter from Rivian from a gross profit percentage perspective. They've added 44 points from the first quarter of 23 and 114 points from the fourth quarter of 22. So again, as they're delivering more, as they're producing more, their economies of scale is kicking in, where they're pushing more cars through the same footprint with the same labor. And so they can spread out the costs easier across those cars. And that's why their profitability is getting better. And that percentage equals to about $32,000 that they lose on a gross profit basis per car in the second quarter of 2023. So even though they're improving, they're still losing money per car, just not as much as they used to, about $32,000 per car in the second quarter. Now, if we overlay how much money they lose per car and how many deliveries they've had per quarter, you can see a very clear trend that's appearing, which is as more deliveries are delivered, as more cars are delivered, their gross profit per vehicle is improving dramatically. And what's of note here on this graph is if you see the red bar here, which is the gross profit, how much money they lose per car, and the blue line, which is how many cars they've delivered per quarter, you can see that between the fourth quarter and first quarter, they delivered about the same cars, but their profitability got much better. And the reason why is because they've put in a lot of efforts from a company perspective to make their factories more efficient, and they've also improved their costs from a raw material perspective as we've exited COVID and all the supply shocks and stuff like that. But if you also look at how many more cars they delivered in Q2 versus Q1, which is this blue line, you can see that their profitability again improved once they started shipping more cars. So Rivian is in this phase right now where they're getting benefits from the business by removing costs, and they're also getting benefits by improving deliveries. So again, Rivian's in a pretty good spot as far as momentum goes, and it's really encouraging to see this sort of trend appear from Rivian. That mechanism where you can push more cars to the same footprint with the same labor is extremely crucial for automakers, especially startups, to make money on their product. And Rivian, thankfully, is really starting to benefit from these effects. Again, huge props to the Rivian team. However, there's still a lot of work to be done to reach that magical break-even number where you're shipping enough cars so that you're not losing money anymore. And that's what Rivian's goal has been since the beginning, is to get enough cars out there produced and delivered so that they can absorb all the costs and start maybe potentially make a little bit of money on the business. As of right now, for the second quarter of 23, Rivian is burning about $1.6 billion in cash per quarter. So basically every quarter on average for the last 5 or so quarters, about $1.6 billion of cash just leaves the bank account. It just goes bye-bye because they have to invest all that money into the factories and to also cover the costs as they ramp up production so that they can reach that break-even point when it comes to producing enough cars. And as of right now, they have about $10 billion of cash in the bank. And so if we look at this from a graphical perspective, the blue bars is how much cash Rivian has in the bank, and the red bars is how much Rivian is burning in cash every quarter. So you can see in the second quarter of 22, Rivian had about $15 billion in cash, and they were burning about $1.6 billion. And as they continue to burn more and more and more and more, you can see their cash balance is continually going down each quarter. And so really, if you do the math and you look at how much cash they have now and how much they're burning, Rivian has about 5 quarters of cash left on hand at the current burn rate. So if they continue burning as much as they are now, and they don't do anything to add more cash to basically their bottom line in their bank account, they have roughly 5 quarters or so of cash left to fund the business. However, if they can continue the momentum that they're on, if they can keep going with what they're doing right now, the cash burn will improve, again, because of those economies of scale. It won't cost them that much more to push more cars to the same footprint, and so they'll get the benefit for every additional car they basically push through and sell, and that should help them dramatically reduce the cash burn as they entered into the, say, 15,000 units per quarter or even 20 or 25,000 units per quarter. That cash burn will improve dramatically. And so it really comes down to continuing this momentum, this awesome momentum that Rivian is on since the fourth quarter of 21, where they're selling basically more cars every quarter. This needs to continue for them to reduce the cash burn. And with Amazon having part ownership of the company, they could decide to infuse cash at any moment into the company if it's needed. Amazon is one of the largest companies in the world. They have a ton of cash. And so that's another thing Rivian has from a beneficial perspective, is that Amazon could step in and be like, here's $10 billion, keep going. And the fact that they have demand could be a really good place for Rivian, where they'll never really run out of cash potentially, as long as they can continue to grow the business and they continue to grow their deliveries. For 2023, we should expect another 30,000 or so deliveries for the second half of the year, which will average at about 15,000 units per quarter, which is higher than the second quarter, which is a good trend for the company. And so all in all, truly, Rivian's trend is positive. It's looking pretty damn good, honestly. They just need to reach this sort of magic number where they can break even on the business with the hopes that there's enough demand for their vehicles. Now, if we put this within context of another US automaker, an EV automaker, just to really highlight how important it is to grow as a new EV maker. Yesterday, I covered Lucid's earnings, which Lucid is another automaker, an EV automaker that makes exclusively very expensive EVs, and they're upstart, they're a new company. From the second quarter of 22, the gray bars, you can see that even though they're a new EV company, they're not really growing. If anything, they're shrinking from the fourth quarter of 2022, whereas Rivian is growing. This is something that Rivian is doing that's very, very difficult, and they're succeeding at it. And unfortunately, Lucid is not seeing the same type of luck from their business. They're increasing production and deliveries and lowering costs. And that is a key variable that's needed for Rivian to really be successful. So the question becomes, will people continue to buy Rivians to ensure that that trajectory remains the same? If we think about the upcoming products that are coming out and the competition, Tesla Cybertruck is set to be released later this year, and this could eat into Rivian's pickup truck business and potentially their SUV business as well. So that's something to keep an eye on if you're somebody who watches Rivian closely. How will a competitor like Tesla or anyone else eat into Rivian's sales in the future? And then what is that magic break-even number of deliveries that Rivian has to reach to break even? If I look at just very basic trends and historically looking at a company like Tesla and what number they reached to really become break even, in my opinion, I think as long as Rivian gets to about 25,000 deliveries per quarter, it should result in pretty consistent profitability. And I really think this product here, the R1S, this 3-row SUV that Rivian is building, that is, I think, in my opinion, the route to success. And ultimately, if you're an EV shopper, you want competition. You want automakers to make great products. And something like this, I think, will be very successful and something that will take Rivian to the promised land, to EV profitability, which seems like only one company so far has been able to do that, and that's Tesla. Who knows? Maybe Rivian is the second one. I think they will be. But I would love to know what you think about Rivian, their latest quarterly earnings, how you view them in the future. Do you think they have good products? Do you think they'll be successful? I'd love to hear your thoughts in the comment section below. And if you would like to support the channel, super easy, just click subscribe. Thank you all so much for watching my videos. About 65% of you are not subscribed, and that's okay. But if you do want to subscribe, that's a very easy way to support the channel. And if you want to go above and beyond, you can also purchase merch and Athletic Greens, which is a supplement I take every day. I'm wearing one of my merch shirts right now. I'm not a model. Hopefully it looks good. And AG1, if you use my coupon, you get free travel packs and vitamin D with your purchase. Thank you so much for watching. I hope this was informative and helpful, and we'll see you on the next one. Take it easy, everybody. Bye-bye.